All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about CPI data, which is set to come out tomorrow before the U.S. equity markets open. So CPI data, of course, is inflation. So I want to talk about the trends that have been going on, what people are expecting, and why you need to watch this video today if you plan on hedging or making any trades ahead of CPI data. This is the last day to do it because this data comes out before the market opens tomorrow morning. So if you're new to the channel, please remember to subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot. Lastly, if you want to support the channel, you can hit the join button on the YouTube page and become a member. There's lots of members content, so we'd love to have you there, and I appreciate everybody supporting the channel. Let's talk about CPI data. I want to just start out by looking at a chart of the historical data over the course of the last year, because this data has been trending in the right direction, but this month there seems to be a little bit of a debate as to what's going to go on. So if we look at this chart, you're going to see this is CPI data for the last 12 months. So inflation peaked at 9.1% in June of 2022. That was the high in the United States. This number did get higher elsewhere in Europe and other places, but it seems like June was the peak. Since then, the US CPI number has gone down 6 months in a row. So on the top line, it's been all good news. Now, there's an awful lot of data that falls underneath this. Tomorrow, when the CPI data comes out, we will review the line items of this and see which ones got better, which ones got worse. And there's certain ones in particular that the Fed and the marketplace are looking very closely at to see whether they improve or if they are still stuck in the mud. If I go down just below this, there's a schedule here, and you can see this gives the previous 3 months worth of CPI data. So last month, the consensus was that the number was going to come in at 6.5. The month previous to that was 7.1, and then last month it did come in at 6.5, so that met expectations, and that in general was a good thing for the market. This month you can see the consensus is at 6.2, so we are expecting the top line inflation number to go down again. So we're going to find out tomorrow morning before the market opens what the actual is. I'm just going to tell you what I think a little bit from an opinion standpoint, and then obviously this is not financial advice, but the reason I want to get this video out today is if anybody wants to make any trades ahead of this to hedge this information, then today is the last day because, like I said, this information will be out before tomorrow's trading starts. I want to show you a few articles and kind of show you what the word on the street is regarding what this number is expected to be tomorrow. This is a piece from Yahoo Finance. So economists expect headline CPI rose 0.5% month over month in January, a notable jump from figures seen in recent months. So the headline CPI data is at 6.2%. That is a year-over-year number. So that's comparing this January to January of 2022. Well, they also compare month over month. So they're saying year over year, we expect there to be a 6.2% increase in inflation, but month over month, we do expect a rise of 0.5. So that is a little more than we've had recently, and a few of the numbers over the past few months have been adjusted to the upside. So if I keep reading, 0.5 month over month in January, a notable jump from the figures seen in recent months. New seasonal adjustments released by the Bureau of Labor Statistics on Friday also switched the December initial reading of a 0.1 monthly drop in headline inflation to an increase of 0.1 in the year's final month. So December of 2022 was adjusted from minus 0.1 to positive 0.1. So there's some of these indicators that people are starting to get a little scared about that might be pointing to the fact that maybe this month's number isn't going to be as good as we hoped it was going to be. Month over month of 0.5, I don't think is as important as the year over year. We've seen 6 months in a row where the year over year CPI data has gone down on a comparative basis. So what I think is important is that that headline number goes down. What we don't want to see is an increase. That would be a trend reversal, and I do think that's the one thing that could send a shock through this system. So let me keep reading. While the monthly CPI figures likely rose in January, the annual headline number is projected to come down to 6.2% from 6.5% in the prior month. consensus estimates compiled by Bloomberg show. So this is what I'm talking about. This is the number that is most paid attention to. There's several numbers in here that are meaningful. This one has been trending in the right direction for a half a year now, so I think it's important that we take our 6-month winning streak and turn it into a 7-month winning streak on this. Core CPI data, which removes the volatile food and energy components of the report and is tracked closely by the Fed, is forecasted to show a 0.4 rise over the month, on par with the upwardly revised 0.4 increase in December. So on an annual basis, economists expect core CPI is going to be 5.5% year over year, down modestly from the annual 5.7% that it was in December. So even that would be trending in the right direction. That's what we want to keep seeing. We want to keep seeing a trend in the right direction. So I'm going to go back to the chart that we started on. The overall consensus estimate is 6.2. So I believe if we come in anywhere between 6.2 to 6.5, that is going to be just fine. I don't think the market is going to have a heavy reaction to any of those numbers. And I do think it's highly probable we come in somewhere between those numbers. There does exist a chance that we could beat those numbers and get lower than 6.2. I think that's a very small chance, but what we want to be careful of is there is also a chance that we come in worse than expected. And if we come in worse than the consensus, but we also come in worse than the previous month at 6.5%, I think that could actually tank the market on a short-term basis. Now, it's just one data point, so as you guys know, data points come at us very rapidly in the market, and, today's news very soon becomes old news. But in the short term, I think that a surprise to the upside on this would be a little bit of a shock to the system. I'm going to go to an article put out by Seeking Alpha. The January CPI report could be a massive shock to the market. So you can see there is some hype coming into this. So summary of this says that CPI is expected to see a big jump in January month over month. So that's that month over month number that we talked about. I'm more concerned with the year over year number. And as long as the month over month number comes in as expected, I think we'll be okay as long as that year over year number, as long as we beat the 6.5% that we hit in December. Recent revisions showed that inflation was running hotter than was previously thought. So we talked about the fact that December was revised up, so it was worse than originally reported. Okay, I also want to talk briefly. I've heard a lot of talk on the internet about the fact that they're changing the way that CPI data is calculated. And I just want to do a very quick explainer because I think a lot of people are misunderstanding what's happening here. I think this is going to have a very, very small impact. And I want to explain what it actually is. For this year, the Bureau has changed its methodology from using consumption data during a 2-year period to only a 1 year to weight the CPI components. So these rebalances are going to be slight. We know what they are. Okay, so back to this article from Seeking Alpha. They say the recent revision to the CPI has also reweighted the various components, leading to changes in their relative importance. For example, energy, which has provided a meaningful deflation impulse in the second half of 2022, will see its weight drop to 6.92%. From 7.86%. Energy is going down a little bit from 7.86 to 6.92%. Meanwhile, the importance of shelter has risen significantly. Now, they say significantly. I'm going to say not really significantly. If you look at these numbers, it's risen to 34.41% from 32.92%. I would hardly call that significantly. Yes, it is a change. These minor changes are going to affect the overall number. I suspect they'll show us what it would have been using the old methodology versus the new methodology, and I suspect that the difference is going to be very little. Lastly, they say used cars and trucks have dropped to 2.66% from 3.62%. So in 2024, they will use the 2022 data to reweight the components of the CPI. All right, this is an article from Yahoo Finance. The headline is, inflation data will test, quote, disinflation optimism. So Fed Chairman Jerome Powell mentioned the word disinflation many times in his speech. Now, taken out of context, it may seem like he was saying that everything is disinflationary and things are wonderful, but what he was really talking about is certain segments have started to experience the disinflation process, which is the process that we need to get inflation back to the target rate of 2.0%. However, there are other sectors that have not yet begun to budge and they remain sticky. So this is something we're going to have to look at on a month-by-month basis. I don't think anything other than a very big outlying number would change what people think the Fed is going to do. It's already very much priced in that the Fed is going to continue to make some very small rate increases. So the one thing that I think could impact the market negatively is if this month's CPI number is over 6.5, that would be a surprise in a bad way, and I think that actually would send a short-term shock through the market. So for me, and again, this is not financial advice, a lot of people do nothing because this is a short-term thing. If you want, some of the things that I do to hedge against this is, buy options, short the Qs which follow the NASDAQ, or there's ETFs that are short the S&P 500. Those would be some simple ways to make a hedge. Again, not financial advice. You guys have to decide if you think this is even worth hedging against, because oftentimes it's just money wasted. So, this is all about risk tolerance and how much you're afraid of the CPI data number. So again, I think this is probably going to be not a big event. Having said that, if by some small chance this number comes in worse than expected, and I mean over 6.5%, then I do think that would be a big move to the downside for the equity markets in the short term. So sometimes it does take the market a little while to digest these numbers. So throughout the trading day, you may see some wild swings as well. But by the end of the day, it should be sorted out. I think we're going to come in somewhere between 6.2 and 6.5, and I think that's going to pretty much meet the market's expectation. So I'm hoping this is a small event or a non-event, but of course, there always is the chance that this is a larger event. So we're going to know the answer to this tomorrow morning. So best of luck, everybody. I will do another update video tomorrow on what CPI actually was, and we'll go line by line and talk about what happened and see how we think that's going to affect the market going forward. So thanks so much for watching. Again, if you have not yet subscribed, please subscribe to the channel. And lastly, of course, you can support the channel by hitting the join button. There's lots of members-only content, and we do a members-only live stream, and we have a lot of fun there. So I hope to see you there, and we'll find out this CPI data tomorrow morning. I'll see you in the next video. Thanks.